Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, April 11th at about 3 p.m. Eastern. Are we having fun yet? Prices of interest rate futures continue to reflect expectations that the U.S. Central Bank will start reducing its policy rate in June or sooner. Traders see the Fed delivering 3 rate cuts in total over the course of the year. The market has calmed down a bit since the 90-day hold on tariffs was announced a day or so ago, and it's calmed down a bit from the volatility certainly that we've been seeing in the past week or so, about the past 7 days in trading. So yes, it's still volatile, but it's calming down at the moment. So first, as we always do, in order to get some rationality into this, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $533.64. That is 14% below the all-time closing high back here on February 19th at $612.93. Now, if you've been watching the market this week, and most of us have, you know that the SPY is trading certainly below its major moving averages. The red line, the 20-day, is right now down to 550. I'm going to round some of these off to make it easier. The 50-day moving average, it looks like it wants to come down over the 200-day. And the 50-day is trading at $574.55. The 200-day, the black line, is coming in here at $573.85. So 50-day trying to cross over the 200. We'll see how that goes. Now we know that the December SPY, in December of 2024, which is back here on your screen, the SPY actually made an all-time closing high back here on in December at $607.81. And that was after, excuse me, we'd had about a year and a half of the SPY walking along, for the most part, not always because it can't do that, but for a lot of the time walking up its 20-day moving average. It did that actually from November of 2023. It's been a wonderful, wonderful rise up. And at some point, tariffs not into any of this yet. At some point, when the market does that, it needs to take a breather. It needs to take a rest. So a lot of us were expecting some rumbling to come into the market soon. And when we saw what happened in December and so forth, we weren't that all surprised. It makes sense. Markets move in cycles. They don't move straight up or straight down forever. As I always say after that one, please God. So after that all-time closing high back here in December at 607.81, then the market rolled over a bit and we saw some volatility coming into it. It came down here to a December low. It fell reasonably hard, but not enough to worry about, down to $580.91, then rallied back up to the 20-day. See, what was support, the 20-day moving average, once price moves below it, then many times becomes resistance. So the 20-day went from being a support, almost a support line here, an uptrend line here, down to being actually acting as a ceiling. So it fell down to 580.91. Then rallied back up to the 20-day, then fell again, then fell, rallied and fell to the January low down here at $575, then pulled itself up nicely and consolidated along the green line, the 50-day moving average, very nicely, and then ran up to that all-time closing high I mentioned. I'm going to mention now and did before at $619.23. And then from there, the party was kind of over. And actually it was expected, and there weren't any tariffs involved in this. So it was ready to kind of sell off a bit. I've been in the market for over 25 years, and this is what happens. There's always a reason, but it does happen. So then it fell down here to the March 13th low at $549 and change, rallied back up here to the 200-day, couldn't get over it, tried to hold here at fell back down, tried to hold at about 560, 550, couldn't do it, and then the tariffs starting affected everything. It fell to a low down here of $481.80 just a few days ago in April. Then it rallied back up here to the 20-day moving average, and then fell back down here to $533.64 to where we are today. So we say, what do we do with all this? I think the best approach here is to stay calm and neutral. That's what I think. I think that's the best way to make a lot of traders or investors who've lost money. It's a great way to make the money back. It's a good viewpoint to have. Negative viewpoints never make for good trading. Overly positive neither. We pretty much want neutral, but with a clear eye and the ability to see what may work for us. And of course, expect no expectations in this market, one way or the other. Just trade what we see, not what we see think will happen, because nobody on the planet knows what's going to happen next. So what we're looking for here, we have potential price support down here at 480, and I think this is extremely important. Very, very important. This 480 line is what I'm going to concentrate on. But if we look up, we say, well, where's the nearest resistance? We have potential resistance up here at the 20-day moving average at coming in at the red line, coming in at $550. Then up here to 567 resistance. And up here to then up to the 50-day moving average, which let's call it 573, 574. And of course, we can see that there's a little price resistance there too coming in at the same time. And then of course, there would be more resistance. I don't think we have to worry about it right now. Back on up here to the highs at 613. So I'm concerned now with right here with the 20-day with this. These numbers here coming right in here at 550 as well as the 20-day moving average could offer some resistance, but it depends on what happens and what announcement comes next. So that is really what I'm just focused on the present moment at this moment. So I'm going to be watching this 480 level next week. The market's definitely oversold here. It may be a tradable bottom, or something may happen that we would say, no, that isn't a tradable bottom. So we just have to, again, stay neutral. Our next chart here is a chart of the Invesco QQQ, symbol QQQ. This ETF follows the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. It includes large cap momentum stocks like NVIDIA, Meta, Apple, Tesla, that whole group. This is, of course, the ETF that we watch a lot when we're trading the tech stocks, the big momentum stocks. Now, when I captured this chart today, the Qs was trading at 400 right here, $453.79. That's 16% below the all-time closing high that we had back here up here on February 19th at $539.52. So we're 16% off of those highs right now today. Since December 2024, back here, this also is a time when the NASDAQ 100, which had been, for the most part, walking up its 20-day moving average with dips in here, occasional dips like that, but for the most part, trending higher for the past year and change. We saw it come up here again to the high at 538 here. Then it came down to the 50-day moving average to 509. Then it rallied back up. Then down to the January low down here at $499.70. I'll call it 500 to make it even. Then rallied back up here to 533. A lot of strength here. Gap down to 510. Then up and consolidated like the SPY did along its 50-day moving average to its new all-time high again on February 19th at $539.52. Then it rolled over, and like the SPY here, guys, another point I want to make. When you see, this is a double, this is not as clear as the SPY was, but this is a double top formation. When price when you make a new all-time closing high and then come back down, walk along, and then take another swipe at it, and right here, this is where buyers did not come in. The Qs came up, took another swat at that all-time high, and buyers did not come in. They put their hands in their pockets and said, we're not buying right now. Well, that means that price will probably go lower, and then you look for the next support area, and you say, okay, if price goes below that, then it's a good chance, not always, but there's a good chance it'll head lower, and that's what exactly happened here. Dropped down to the March low, again at 466. Then it rallied back up, and you say, okay, that's a valid double top. Tariffs or no tariffs, news or no news. That's a valid shallow, not too bad, but there it is. This is human behavior on a screen right here. Price charts are human behavior on a screen. So anyway, price came back up to the 200-day, then up to 494 about, then fell all the way down here. And of course, this certainly was the tariff negotiations right here. Then dropped to the April 7th, this was April 7th, dropped to this low here at $402.39. Then it rallied back up pretty quickly, back up to its 20-day moving average. This was on Wednesday right here of this week. Came back up to the 20-day at 465.70, then dropped back off. And the last 2 days, I said, as the tariffs have been, the announcement was made that we're going to calm down with that a little bit, put it on a 90-day hold as they negotiate. Right now, today, it doesn't seem volatile after what happened in the past week, but we are positive at the moment, again at $453.79. Now we say, what do we do with this? Well, looking forward, there's potential. It was before potential resistance from the 20-day moving average, again coming in at 465. Then we can look at the March low right here, coming in at about 466 or so. So we can look at that, which actually right where the 20-day is, then up to the 200-day and the 50-day up here at 493, just about $493 right here, which of course coincides with that price pivot. So that 493 area could be a little tough to get through. Of course, this will all change in the next few days, the 50-day and 200-day, but this price pivot here is worth watching at 493. And then we have the January low coming in here at 500, so that's another area to watch. And of course, then up to the 539 highs. So what we have down here that I'll be watching more intently this week is the support low at 402. If you want to call it 400, do it. That's fine. Then in the next week, this is the level to watch for tech stocks on the Qs. Does it hold or does it not? And so this is where we see. Remember also, guys, as I said before, price only moves in three directions. It is human behavior on a screen, but it only moves in three directions. Price moves up, down, or sideways. We can get it confused with everything that's been going on, but that's what happens. It goes up and down and sideways. If we get a break down here and price breaks below, hopefully it doesn't, the Qs break below 402, then it's possible that this broken support area could lead to a lower level for the Qs. Fingers crossed that doesn't happen, but hope is not a strategy. Again, we want to trade here what we see, not what we think will happen, because no one knows what's going to happen. Just act wisely and make sure you use hard stops. That's what I would advise. Our final chart today is a daily chart of the Van Eck Pharmaceutical ETF, the PPH. It has 25 holdings. Top holdings include Eli Lilly, Johnson & Johnson, AbbVie, Novartis, and AstraZeneca. Now, when I captured this chart today, the PPH was trading right here at $81.81. We can look and see how it's fallen pretty dramatically here. The 200-day moving average, the black line, is up here at 91. The 50-day is up here at 90 and change, and the 20-day is here at $88 and change. And we say, what happened here? And by the way, this chart, the PPH is usually a pretty orderly chart. I like to trade it for that reason. And then we can see that it made a very dramatic dive. But this chart is kind of reminiscent of a lot of charts in the stock market right now, is that, and even though this is an ETF and it has 25 holdings, as I told you, so it does, it's actually a little more stable because it's got 25 stocks going up and down in it, and we get the price we have, of course, is the average of those prices at any given moment. It's a little softer than perhaps a single stock, but this pattern is very common right now of course, dumpster dive. Very, very common. So what we want to do is see if we can work this. If you want to get in the stock market, you certainly don't have to. If you want to stay out and watch, that is indeed valid. So stay on the sidelines and just watch. But we'll look at this a little bit to see if anyone wants to potentially stick their toe into it. If we look left on this chart, we can see, and by the way, right here where it is now, it came down to a low of 78. We do have price support for that, prior price support from November, December 2023, just for anyone who wants to know. I always like to look at long-term charts. So at any rate, back to this chart, up here on the left, the PPH made an all-time high on August in 2024 at $99.43. That was an all-time high. After it did that, it rolled over and started diving a little bit, came on down to these lows right here, and then ran up and then tested them again. We're coming in here at about 85. Price, as I said, rolled over from that, came down, and it makes sense. A lot of the tech stocks were trying to move higher here, and money was flowing into them. That tends to happen a lot when tech stocks take over. Money flows into them more actively than it does pharmaceuticals many times. Although pharmaceuticals are one of the staples we look to when the market is lower and we want to perhaps move out of some of the more volatile tech stocks. So pharmaceuticals come in handy as well. So it did move down to that 85 point, then came on over here in January, rallied back up, moved up through its 20-day, its 50-day, up past the 200-day, and came up here to these highs right here in February at about 95, then rolled back over with the rest of the market in February, rolled back down here and came back down to these lows right here at $78 and I think 11 cents, then came back up here to where it is now at $81.85. So if in the coming week, I'm going to watch this. It's not saying I'm going to jump in, but I do want to watch it. Buy low is always a nice thing to do, if it's possible and wise at the time. So in the coming week, depending, of course, on what the S&P 500 is doing, but in the coming week, if it stays relatively neutral and or positive, and the PPH can stay above $78 here, see this low, 78, I may buy a small position in my trading portfolio. And you know, you can start out, if you want to do it, if you want to take the chance, you can buy just a few shares at a time, not very much, and then gradually build a position if it works. And if it doesn't work, you get out. So, but don't go in big all at once. Anyway, that's my advice. So if in the coming week, the PPH can stay above $78, I may buy a small position of this for my trading portfolio with a stop at $77.25. I'm not in the mood to lose any more than that. If and when the PPH closes above the 200-day moving average, and that's up here right now at $91.52, The 200, if price starts up, the 200-day will start down. But for our immediate, if we're looking at this right now, the 200-day is coming in at $91.52. So if the PPH can get above 91.50 at the moment, although that this line will change, but even you can even use that as a price if you want, and stays above it for 3 consecutive days, then I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PPH in the coming week. And for those of you who say, hey Toni, what about tech stocks? Let me give you this one real quick. The Invesco NASDAQ Internet ETF, the Invesco NASDAQ Internet ETF. If you want to look at an ETF that you may want to just check out, it has a similar price pattern to this. You do the same thing, put a stop below the lows. The symbol is PNQI, PN like Nancy, PNQI. It has, it's now trading at about $42 a share, and its top stocks are Microsoft, Apple, Alphabet, Amazon, and Apple. So, oh, I said Apple twice, sorry. So if you want to trade internet stocks but don't want to get into the individual stocks themselves, certainly it can be expensive to get into a Microsoft or an Alphabet. You can look at the PNQI ETF, again, trading at about $42 a share, and you can get into these stocks through that ETF and perhaps have a little more orderly time of it. So you can look at that if you like. And again, standing on the sidelines is also can be a very smart thing to do. So see what you think. Okay, and now please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Trade the Trend to Profits is perfect training program to help you enter, manage, and take maximum gains from long-term trades. And hopefully we can pick out some right now that end up being long-term trades. You will trade with confidence because you will understand how to buy low and sell high using my unique strategy for long-term trading. Also known as trend trading, core trading, and position trading. When you use my techniques, this is one of the easiest way to bring home consistent profits from the market, especially when this market evens out. We can look at these beginning of these new trends. We can put our prices down under the lows, put our stops down under the lows, and it may work out really well. Our new low price for this program is only $127, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. These are the charts I use. And once you purchase, you have unlimited access to learn at your own pace. From our ever-popular 7 Steps to Successful Trading, that's a great program to go through right now, really good. How to swing trade successfully, also a great strategy for what we're going through right now. Trade the trend to profits, how to read charts, another one that's great to look at right now and brush up on. 3 winning setups, great for short-term trades like we need right now. Bottom fish like a pro, and more. Find out how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.